Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. Welcome back to the show, Rick.
Always a pleasure to join you, Jim. Thanks for inviting me.
Rick, you started off when I first called you this morning, a nice little rant about having to deal with high-tech companies and how it's impossible if you call them or email to actually deal with a human to deal with your very human problems. What kind of difficulties have you run into, and would you feel they're probably pretty typical for anybody trying to deal with a giant like Facebook?
Well, let me give you just a for instance there,
yeah.
Jim. My ex-wife used to do some of my administrative stuff with PayPal. And so she was the administrative manager's name on the account. Well, we've been divorced for a year and a half, and I've been trying for almost that long to get her name off my account. And you'd think that would be pretty simple. You'd call some number and some cheery customer service person would answer, but they don't. You wind up, there's no human being. You'll never reach a human being at PayPal. And the only reason I'm going to do that anyway is I pay hundreds of dollars a year for a service that can tell me that this fella Ben, who is the director of business development at Facebook, it'll give me his cell phone number. So the only way I can really get through is to call him at 3 a.m. But in the meantime, I've invested a lot of hours just trying to get PayPal to take my ex-wife's name off as the administrator of my account. And it's really simple things like that you can no longer, you go into, it's like a Dickens novel, Bleak House. It just never ends. And even with PayPal, with Facebook, similar problems, a $680 charge showed up on my business credit card. And of course I'd like to know what that was for. And you actually can reach someone at Facebook at some point. If you work at it for a couple days and you're really good and you know what you're doing, you may actually reach a human being there. They've done everything they can to wall themselves off from their customers. But if you get a human being, though, in this case, they said, well, we don't really know about that charge. We don't know. We can't find it. And then I give them the reference number that is on the charge that showed up on my business card. And she said, okay, I'll check it against the reference number. And she comes back and she said, I still can't find that charge. So the only way you can get around, you can deal with it is to go to an actual bank, a legitimate bank like Wells Fargo, and just deny the charge. So I'm disputing the charge, and maybe that will bring some human being from Facebook, get a call from an actual human because I've taken back their money and or my money. So Lord knows where that's going to put me on their bad list, because we're reading stories just a week ago in the Journal that say that every call that you make, every customer service call you make is logged against an algorithm that tells them how good a customer you are. So if you're waiting for 40 minutes to talk to someone at some company, you better believe that wait is being dictated by your score, your ranking as a customer.
And how good a customer you are. In other words, they don't rate their service. They rate how well they can manipulate you.
Right. And if you're a nudge, you've called them a few times and your dollar value to them as a customer is not high, you better be ready to wait for a real long time. If you get anybody at all. So they really have, I wouldn't say just second-tier customers, the algorithms give them the ability to segregate customers into 50 different categories. And of course, if you're spending a lot of money and never complaining, they'll take your call right away.
Well, as an example of their arrogance, the last time I recall, Zuckerberg has refused to appear before what they call the Super Committee of Canada and the UK to question him about privacy concerns. So you're not alone. I mean, Facebook is denying to talk to entire nations that have actually grouped together to question them.
That surprises me because he gave such a great performance in front of a U.S. panel. You know, here's a guy who literally is selling billions of people down the river. You know, every eyeball is money to him, and he got in front of Congress and basically he bamboozled them completely. He said, well, we're really not doing anything, you know, that we shouldn't be doing, and it's all benefiting you anyway. And there were a couple congressmen who were probably as cynical about the whole thing as I would be, but even they didn't really have much leverage. It's like Zuckerberg, he can talk a blue streak, and, you know, there's no way that they're penetrating that curtain that he puts up. You know, he says, don't worry, no problem. But he knows, and investors know too, Facebook's been really slammed because Facebook's not fooling European regulators. And although I hate to be in any way praising what goes on in Europe, especially at the administrative level, they've got his number, you know, and the obvious train coming down the tracks there, ready to smack Zuckerberg, ready to run him over, has to do with privacy laws and the inevitability that the U.S. will at some point adopt privacy laws that are commensurate with what we're seeing in Europe.
We'll have more with Rick Ackerman right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI, and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Rick Ackerman. Rick, crude oil has taken a pounding lately. What's your forecast? It's now in the $50 range. It wasn't all that long ago. It was over $70.
Well, it's interesting that the stock market, it's getting to the point where even the lackeys in the news media attribute days when the stock market is weak to falling oil prices. And I think what's happened is that we've gotten sort of comfortable with the thing that everybody wants, you know, which is just a little bit of inflation. That is the magical land of Oz scenario. So we've had that little bit of inflation, and the irony is, or paradox, is that just as we start reading about how inflation is about to go out of control, maybe even pushing wages up, heaven forbid, I think we're closer than ever to a deflationary bust. And the reason is whatever nickels and dimes come at us, you know, if there's inflation in wages, it's really minimal. I call it lettuce bin, grocery bin inflation. You know, we see the prices of a lot of things go up, but compared to the deflationary juggernaut, the inflation we're experiencing is nothing. And the juggernaut is the sum total, the sum of all fears, really. It's a social security system that is headed into bankruptcy. And let me just stop with that one, because there's no way you can inflate a failing pension system. It's one thing for these jerks to monetize the financial system to essentially monetize financial assets and real estate. In other words, pump the stock market and pump residential, and make us think that we're all getting rich. But you can't inflate a pension system because it would imply literal helicopter money. You would have to be sending checks out to bail out all these systems, and the money would get spent. It's real money. It's not like funny money that pumps up stocks. It is money that pays doctor bills and grocery bills and this and that. So, we already know that the first pension system that's going to fail will be Illinois, followed by California and New York. But Illinois is really the shakiest of them all. And we're going to discover there can't be a bailout there, because you bail out Illinois, and California's going to say, well, why can't the government bail out us too? And whenever I use the word government, I'm really in my mind substituting the word taxpayer, because that's all government is. Government doesn't exist if it has no money to spend. So we should always substitute the word government taxpayer when we say government. And getting back to your original question, I put out something this morning at my homepage, rickackerman.com, that says that the $2.06 target that I have for oil per barrel obviously can't be right, but the sort of midway point would be $30 a barrel, and I could certainly see that. And if it's coming, for one, it says yes, we're going to be in a really brutal global deflation at that point, and in part because there's so many assets that are leveraged to energy, the energy sector. But if there's a reason, it may be slowly becoming apparent in China's deepening recession, because China sets the price of energy at the margin. They're the biggest consumer in the world at the margin, and China right now its oil consumption its needs are decreasing. So I think that if you extrapolate a global economic downturn from what's happening in China already, and then take all the political pathways, just say they don't lead to a good place, like the tariff war for one. If the tariff war gets unresolved or does not get resolved, then things just get worse. So I think that's what oil is saying right now, is that the global economic picture is darkening.
Does it confuse things as well, where you have President Trump saying, I can't wait to meet President Xi again so we can sit down and settle our differences, and then Mike Pence says the next day, there's no resolution here, we're looking at a new Cold War?
Yeah, I think that's true. You can probably take Trump at his word at face value. He just thinks that there'll be some backslapping next time he gets together with the Chinese leader, and everything will be okay. But you also have to give him credit for understanding that they're going to play hardball too. And I'm afraid that when you get two hardball players together, the backslapping isn't going to do much good. So even though I was hopeful that China would come around, they might not. I mean, they might just kind of hunker down here and say, screw it, you've got more to lose than we do. And of course that's the crux of the argument, really. When Trump's trying to do a deal, who's got more to lose?
Well, perhaps an indication of how China's trying to pump up their economy is the fact that they've removed the 50% tax on cars.
Yeah, China long ago thought, well, we've really got to become more reliant domestically, be more American in that way by extending as much credit as we can and getting everybody on a credit hook and buying cars and houses. Of course, China is, we're going to see when deep recession hits China, whether all these ghost cities and facilities, the infrastructure that China has built, what kind of drag that puts on the economy may put them into a hole so deep they'll never get out of it. But they do have that problem, not only in China, but all over the world where they've reached out. I don't say reached out in a friendly, magnanimous way, but they've done projects in Africa and the Middle East, everywhere, essentially to extend their their tentacles to set up trade infrastructure for one, and they'll make a loan that will build a highway in Malaysia or wherever, and in each similar situation, the borrowers have realized they're in over their heads, and some of them are starting to turn down Chinese infrastructure money because the countries themselves realize we really can't afford this, even though China wants to build us lots of roads and transit systems and this and that. It costs real money, and we'll be on the hook to pay it back. So that's another deflationary juggernaut just kind of waiting out there.
Wasn't an example of that Sri Lanka, where China financed their port? They couldn't make the payments, so China took over their major port.
Yeah, I mean, that's happening, and it's going to happen on a larger scale at some point. You're going to see more of that, because what's happened up to this point in terms of building out infrastructure, it's been in a period of general global prosperity. But you put all those projects on the downside of economic growth, and you start seeing real problems, which we will.
Do you think businesses around the world have been, duped by the Chinese? Because when the Golden Wing Dragon Company invests in your company, it's really the Chinese government doing it, isn't it? With just a friendly face in the chairman's chair.
Yeah, but there, I don't know. You can't really say that even capitalism operating through, let's say, the World Bank has its problems. You'd say, well, you can't really centrally plan all this growth. It has to happen organically. So in that way, China winds up being no better or worse than, the international bank. And, I would say the problem being the Chinese, in terms of what they see for the future, is probably more optimistic than any international lending body. So they wind up being like Chicago real estate developers. They just, wherever they go, they want to build out, and things are a little too built out already.
We'll have more with Rick Ackerman right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, do you think the U.S. Fed is going to continue to hike interest rates into the indefinite future, or are they going to put the brakes to it if they see the U.S. economy take a downturn?
Well, they're swearing up and down that they've got at least 2 or 3 more hikes in store for us, but I can't see it. I mean, they should really be loosening right now. The stocks are coming down pretty hard, and of course the only thing the Fed really cares about is the stock market. I don't care what they say they're targeting or what the pundits say the Fed is targeting. They just want the stock market to be exuberant, because that's what really, that's more supportive of this false economy that we have than anything else. So, if I say if stocks keep coming down, how can the Fed possibly keep tightening? That can change from day to day. We get a 1,000-point rally in the Dow, and the Fed will just keep going about its business, which they keep saying is more tightening. So I don't know. I think they've already passed the suicidal point on tightening now.
President Trump has said that the biggest threat against him is the Fed. Can he actually influence it, or is it truly independent? Someone should send Trump a copy of A Creature from Jekyll Island. I think he's been around the block, and he probably understands what the Fed is all about. And in that way,
he's not exactly Rand Paul. You know, you get a guy like Rand Paul in office as president, which will never happen, and Rand Paul's goal would be not so much to criticize the Fed, but to eliminate it. But Trump, on the other hand, he definitely wants the Fed to be there, but just always in an accommodative way. The Fed only exists to loosen, and that's really what the Fed has been doing throughout most of his history. It's just been pumping a lot of money into the system, and of course that's why, you know, you could buy a decent car for $4,000 in the 60s, and now, you know, you're paying $33,000 for it. It's not like cars have gotten more expensive. It's just that the money has gotten much less valuable. So, you know, Trump, it's okay that he's in a shouting match with the Fed. It's not really going to hurt anything. The Fed is going to do what it's going to do anyway.
Going back to U.S. dollar policy, and I guess it's connected to interest rates, you're saying the world, no matter whether you took out loans in U.S. dollars or you're buying U.S. commodities, if the U.S. dollar goes up in value, that really hurts just about everybody else, doesn't it?
Yes, and when you speak about that in kind of a macro frame of reference, it's all dollars. You know, even the lunatics out there that talk about, well, we're going to go off the dollar standard, or there'll be some other reserve currency. That's ridiculous. You know, the dollar is the only currency that can remotely handle the global casino games there. And, you know, because all the bogus paper out there, and most paper that relates to financial transactions is bogus, because all the collateral is bogus, it implies a deflationary endgame simply because whatever has been borrowed, implicitly or explicitly, will have to be repaid mostly in dollars. That's where all the borrowing has been done. So even when you speak of the derivatives market, a hyper-leveraged market of financial instruments that aggregates to something like $2 quadrillion, it's just, in the end, all the paper has to settle up in dollars. Now, so if you owe them and real dollars become scarce, the Fed isn't creating them, the money supply essentially is imploding, then, you know, it's going to be very hard to get your hands on dollars to settle loans. And when you look at how much of the borrowing that's done in money markets, how short-term a lot of these loans are, there's going to be a real scramble when so many of these short-term loans they won't roll. You know, we're sort of in a perpetual rollover now where everything just sort of rolls into the next month or, you know, the next hour, the way that, you know, the next day, the way some of these instruments work. So there'll come a day really when everybody loses trust in everybody else and they all want their dollars if they're owed dollars. And, at that point, you won't be able to get your hands on a real dollar to settle up. So, that also implies a deflationary end simply because there's no way to inflate the money system in a way to liquefy the banking system. You can inflate the money system, but it's mismatched as to the timing of the time element of the crisis. You know, people start lining up at the banks, it's already over. You can't ship truckloads of dollars out to the banks, and you can't say, we'll add 3 zeros to everyone's account, because the digital system on which our currency operates now will be compromised. You know, it's sort of a daisy chain of misplaced trust, and as soon as just even a small link in that daisy chain fails, the clearing system that gives us plastic money will cease to function.
Rick, thank you so much for chatting with us.
Always a pleasure, Jim.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks. His website, rickackerman.com. If you have any questions for Rick or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.